And hello, everyone. Welcome to our power scanning session. It is January the 24th, 2026. And once again, it is time today to look out for the most interesting and promising swing trading setups for the week and the weeks ahead. My name is Daniel. I will be your moderator throughout this webinar, and I am greeting you once again today from our beautiful office here in downtown Montreal. It's a bitter cold day today. And we are in a polar vortex weather situation at minus 24 degrees centigrade this morning. Super, super cold. I normally walk to the office from my home. Today I took an Uber. It was just, yeah, it was not doable today. Really, really cold. Yeah, but I made it. And here we go. All right. So before we get into it, where are you guys calling in from? Who do we have today in the room? We have Lenny from New York City. Yeah, crisp and frigid, he says. He's blaming Canada for the weather. Okay, I guess it's coming over from Canada. Nice to have you, Lenny. Stephen from Singapore. Hey, Stephen, how are you? I bet the weather in Singapore right now is a little bit different than here. How's it going over there? I've been to Singapore. It's a great place. It was very warm when I went there, but very enjoyable. Fabian from Hannover. Hey, Fabian, wie geht's? Andrea, moin moin from Hamburg. Hey, Andrea, how are you? And Edda, also from Hamburg. Hey, Edda, how are you? Did you get my email? Edda, regarding the watch list? Hopefully, this is all sorted now. John from Chile, Fort Collins, Colorado. So that seems to be a common theme today. It's cold here in North America. Yeah, Canada, US, polar vortex situation. And Stephen says he's doing good. It's 1 a.m. in the morning. Wow, that's dedication. Thanks, Stephen, for staying up. Hopefully, we're gonna make it worth your while. All right. Aubrey from slightly damp Cyprus. Not sure what damp exactly means, but I bet it's not minus 24 today. Andrea from Mainz. Hey, Andrea, wie geht's? Mainz is close to Frankfurt, in case you're wondering, in Germany. And Arthur, also from Hamburg. Once again, a very strong presence from Hamburg today, which makes me very happy because I grew up near Hamburg when I was young. Mark from Birmingham, Alabama, 45 Fahrenheit, which is about, if I had to guess, maybe 10 degrees centigrade, something like this. And Hauke also from Hamburg. Oh my goodness. Amazing. We have Udo from Osnabrück. Hey, Udo, how are you? Good to have you. And Keith from rainy Scotland. Of course, it's rainy. This is the stereotype that everybody has, I guess, from Scotland and England. But Keith is from Scotland, not from England. And Kelly from Las Vegas. Beautiful weather. Good for you. Uh, in Las Vegas. It's been a while since I've been to Las Vegas. We used to go all the time for the Money Show and the Traders Expo in Las Vegas, but they have been going downhill a little bit as of late. So we haven't been there since, but hopefully soon again. And Arby says it's rainy at 14 degrees. All right. And Tien from Groove Garden, California. Hey, Tien, how are you? Good morning to you. And Andreas is saying it's not that cold in Germany. Okay, perfect. All right, guys. Well, thank you so much for sharing your location. Let's get into it. And oops, let me just bring my little window out of the way. And just as a reminder, today we're going to be talking about swing trading. And the swing trade typically, it's not written in stone, but typically takes between 1 and 20 weeks. So it's not a day trade, which you would open and also close within the same day. And it's also not a super long-term investment. It's right in the middle of these two extremes. Uh, and in fact, what we're going to be doing today is called or termed our 13 minutes strategy. And you may say, okay, 30 minutes, that sounds arbitrary. Why 30 minutes? Well, it doesn't really matter how many minutes it is. The key point here is that what I'm going to be showing you today can be done by everyone in this room today if you have access to our dashboard and scanner in just a couple of minutes. It's very fast. The reason why this session is taking 1 hour is because I talk too much. But if I would stop talking and just focusing on the setups and do the scanning, this is a really fast process. And this is by design because we envision, and this was the idea behind developing our liquidity view dashboard, is that everybody can do this after the market is closed. Maybe in the evening, depending on your time zone, after the market is closed, switch on your dashboard, scan for a couple of trades, find your subs that you're interested in, and then you're done in like 10 minutes. Or you do it in the morning, right before the market opens, in just a couple of minutes. We all have busy lives, you have busy days. So we envision it as being a very efficient process, which everybody can do in just a couple of minutes. Now, You may ask, and if you're joining us today for the very first time, you're definitely going to be asking this question. Who are these guys? Who is this Daniel guy talking right now? Well, we are tradingindicators.com. And as our name suggests, we specialize on creating innovative trading indicators. This is really our bread and butter. This is what we've been doing for the last 10 years, and we've built more than 1,000 trading indicators for clients all over the world. In Canada, where we are headquartered, in the US, in Europe, in Australia, South America, really all over the world. It's been really a humbling and crazy experience, and we're also happy to be able to do this. And I should also say that back then, 10 years ago, I remember sitting in a homeless basement in Calgary back in the day. I was visiting her. She was living in Western Canada back then in her basement. We were brainstorming about, hey, how can we create a trading business? And of course, the idea of creating trading indicators was out there, but we thought we also need something else. And then, we came up with the idea, what if we could provide an innovative trading scanner? And this is exactly what we've done. It took a couple of years. This was a long time ago. It's still very vivid in my memory, but it took a couple of years. But finally, we have developed our Liquidity View dashboard. And this is the very same dashboard that we will be using today to find, in just a couple of minutes, our the most promising swing trading setups for the next week and the next weeks. And we also have Nicholas in the room today. Nicholas has joined us about 5 years ago, maybe even more. I forget. It's been quite some time. I know Nicholas back from my university days, so maybe it's even longer ago. Thinking of that, maybe it's 7, 8 years ago. Who knows? Back then, he was a student in my class. A little side story. As we're easing into the session, I was teaching C++ at the university here in Montreal. Nicholas was one of the students, and I remembered him because I never saw him in class, strangely, yet he always had great grades in his midterm and finals. So I talked to him afterwards. Hey, Nicholas, we're creating this business. Are you interested? And he was, and he said, hey, I love finance. I trade for myself on the side, and yeah, getting exposure to fintech and creating trading indicators, trading solutions. That was a great match. And ever since, Nicholas has joined our team, and he's also in the chat today. So that was really good fortune back then. All right, now enough talking about ourselves. Let's get into it. Just one more thing. If you have any questions, please don't hold back. Put your questions into the Q&A box. There will be plenty of time for those questions as we go through this presentation. I also need to remind you that trading does contain risks and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, or really anything based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so let's start with our market review. Before we do, a quick reminder, just a couple of housekeeping items here. A quick reminder that if you don't have our Liquidity View dashboard yet, maybe think about signing up for a free trial right now, because that way, and I mean right now, the second, that way you can follow along. You can use the very same steps and filters that I will be using on the dashboard. The sign-up process is super fast. It takes literally just 1 minute until you can log into the dashboard. There's no obligation, no contract. And all you need to do is to go to tradingindicators.com/view, click I want to sign up, do it, put your information there, and then you will get 1 week of a free trial. And of course, if you want to stay on board later on, you won't be charged today. But if you want to stay later on, we have interesting monthly and yearly options as well. Two more things. We have recorded an extensive boot camp on our Liquidity View dashboard, which details all the various features. And I feel we have to re-record it very soon again, because we've been adding more and more features to it. It's very comprehensive. It's a 2.5 hours session available at tradingindicators.com/bootcamp. Why am I saying this right now? Because what you're going to be seeing today is really just a small subset of the features of this dashboard. There are so many more things which may be something that could help you in your trading. So if you want to learn about all these additional features, check out our bootcamp. Now, a few more things. We do have a Discord channel available at tradingindicators.com/Discord. If you haven't logged in yet, consider logging in, because in there we are publishing trade ideas, We have interactions with our community members can interact with each other and so forth. So we're trying to build a trading community. We also have written an ebook called The Power of Three, available here. Niklas, please put this link into the chat box if you can. The Power of Three ebook details the three setups that we typically scan for in these sessions a bit further. If you're interested, download it via this link. And the last thing I want to say before we get right into the markets, if you have any feedback, please don't hold back. Your feedback is what drives the further development of our dashboard. So all these things listed here, like German language support. I mean, of course, I could have thought about this myself, being German, but we have so many German clients now. This was something we have added a long time ago to our dashboard. Additional filters, additional scans, more stuff like dividends and so forth. All this is now available on our dashboard thanks to your feedback. So please don't hold back. If you have any suggestions, please put them into the Q&A box or send us an email afterwards, even simple requests. All right, now, without further ado, let's get started with our market review. So I'm going to switch over to our dashboard. Let me just quickly find it. There we go. And yeah, here we go. This is our liquidity view dashboard. And we're going to start with the SPY. Boy, interesting week, huh? It was interesting. But at the same time, very satisfying as well, at least to us. What did we say on Tuesday? Not sure if somebody was in our lunch and learn session on Tuesday. I remember saying it, unless I'm going crazy. I remember saying, hey guys, this on Tuesday is a level 4 pullback in recent history. These pullbacks, you can see them here and here and here and so forth and so forth. These have been great opportunities to potentially think about a long position in the SPY because almost every single time these pullbacks have been almost immediately bought up. What happened? Prices jumped up again. The reason is not so important. This is technical analysis. It's just history repeating itself. All right, so this was back then, and now what's happening from now on? So now it's a bit more complicated to make a stand here because we are right smack down the middle in this green area. And if you know our dashboard, let me just quickly enable the label here. If you know what that is, it's a resistance level. So we're right at resistance. And of course, resistance is named resistance for a reason. There is a chance from a technical point of view, from a technical analysis point of view, that prices may bounce a little bit off this level towards lower price levels. So right now, I'll be careful. It all depends how the market opens on Monday to go long right now. First, I either want to see prices go above this level, then I think we have blue skies or clear skies ahead, or if there is another pullback, well, maybe another chance to get in at a lower price. So I will let the market decide what it wants to do, and I will act afterwards that decision has been done. All right. So moving on, let's talk about the Qs. Here it's also interesting. The NASDAQ 100 ETF. And what's happening here? First off, of course, same picture, and it's not surprising because the Qs and the SPY are often directly correlated. Also here, we did have on Tuesday, when the markets opened after the long weekend, we did have a level 4 pullback. You can see it here, 4 levels down. And once again, we called it out. This was an interesting opportunity. Of course, it was because it's done now to potentially think about a long position. Because also here, these pullbacks, which happen basically every 2-3 weeks, something around this, these had been really good opportunities to potentially go into a long trade or think about a long position. And also here now, we immediately went up. And also here, we are approaching this resistance level. So going long right now, I would not do it personally. Of course, you do whatever you want, but we are right below resistance. From a technical point of view, these are the long trades you potentially want to avoid because we may bounce off this resistance level towards lower price levels, which once again could be a great opportunity if we break above it. Well, then also here, we have clear skies ahead. The all-time highs are not far away, and I think here we will eventually push towards all-time highs in the Qs. Let's talk about the Russell. IWM, also interesting. Lots of just fascinating things happening across the board. So the Russell, before I open the chart, and we discussed this on last Saturday, but also on Tuesday, the Russell had been outperforming the Qs and the SPY. It's been stronger. It was not so affected by news. It's just pushing higher and higher. But strangely, very strangely, I'm going to open up the Russell in a second. while the SPY and also the Q, this is still the Qs here, had a very bullish day on Friday, the Russell, strangely, had a very bearish day. Once I open the chart here, look at this huge down bar. Sorry, huge, big down bar here. It only came down to a level one pullback, but nonetheless, it didn't follow suit. I'm not surprised by this because I think what we may be seeing here is a zone break retrace setup in progress, meaning we might be seeing a deeper correction on the Russell here ever since we broke above this resistance level. Prices coming down potentially towards the 255 level, maybe 254. And then if they do, this could be an interesting long opportunity. So I would wait here also for this pullback to complete and then think about long entries. Let's talk about oil. USO is the ETF of choice, which we typically use for this, or is interesting too, because it's decision time. So we are bearish. Overall, we are sideways, like long term. That's sideways. Prices have been bounced between 83 in the USO and 60 for years now. And if you look at this macro point of view, we are smack down the middle, like we're really centered right now. But maybe that's a bit too far zoomed out. So let's see what's in our immediate vicinity right now. We can see we're bearish, but we are at this resistance level. And there's a good chance, especially if this gap here, that we will be bouncing off this level towards lower price levels. There's a chance for this, a good chance for this. It would align with the trend. What's interesting, however, is that we did bounce off this level in the past. You can see it here. And we also did bounce off the support level here and also here in the past. But every time this happened, the move towards these levels was accompanied by these shaded areas. And you may know what these areas are. Let me enable the labels real quick for that one. Most of you will know it by heart. I'm going to enable it anyways. These are liquidity capture events. These are events where a candle comes close to a level, either resistance or support down here, and that candle has abnormally high volume. And in our view, if this happens, first of all, it's a sign that, hey, something is going on. For some reason, this candle this day is heavily traded. And our view is that it will increase the chance of having a bounce off this level rather than a break of this level. So it happened here. We had the liquidity capture events. You can see these shaded areas. We had it here, we had it here and here. But strangely, on this candle, we don't have it. So can we conclude now, hey, we're going to break this level? No, I will not trade this symbol long right now, but I will also be careful with establishing a short position, even though if it aligns with trend, maybe now it's time for this level to be broken to the upside. I'm just saying it's an interesting observation. We do have more interesting setups to trade, but nonetheless, something to think about when it comes to oil. Now let's talk about something more straightforward. Gold and silver. Oh my goodness. Oh, we do these live scanning sessions, and the setups we find they're fantastic because they're based on patience and pullbacks and really getting the right entry price. And this works many times very nicely. We're going to look at the trade results from last week in a second. But in some situations, like gold and silver, you will simply miss out on opportunities using this approach. And we're thinking potentially at some point we're going to have some additional setups to be able to find these opportunities more often. Because here, what we typically do is we wait for pullbacks to think on any entry, a level 3 pullback or maybe a level 4 pullback as per our trend radar indicator. There hasn't been such a pullback since the beginning of the year. And look where prices are right now. Well, we want that, hey, prices are extended. We are really far away from these averages, and there is a chance of a pullback. But of course, it's just a chance. It will come eventually. It's a question of when, not if. There will be a pullback coming, but you may miss out on opportunity if you wait too long. But that's our style. That's how we trade. We wait patiently for the perfect entry. And of course, of all these symbols that we can trade, there was always going to be plenty of opportunities for trades. But yeah, gold and especially silver. If I look at silver right now, SLV, oh boy, it seems to be unstoppable. Look at this. It's a parabolic move to the upside. And it's also in every textbook on technical analysis. you can read up or you can study that after a parabolic move, the correction that will follow suit oftentimes will be a very deep one. That's exactly why I'm so timid to enter any long position, because anytime now, when there will be a deeper correction coming in silver. I'm certain of it. I just don't want to be caught in that correction. Anyways, on the good news is that silver used to be very expensive in terms of options pricing, at about 10% for ATM options at the money options with 30 days to go. Now it's about half the price. So the implied volatility of these options is going down. And maybe at some point there will be a good play available with options. I think they're still expensive to do something with options here, which would be a risk limited way to trade silver to the long direction, because then you only really are risking your options premium. All right. So one more, and then we're going to start with our scanning process. Bitcoin, BTC. What's going on there? Well, we will see. Remember when I said that I personally, of course, if you're joining us today for the first time, you don't remember, but if you joined us previously, I still think there is a chance of this level or three-wave correction to the downside, which would bring us to the 73, 74,000 level in Bitcoin. It might still be possible because we saw this first leg down. Of course, this is within the context of a huge uptrend. So the big uptrend in Bitcoin started a long time ago, big move up, and now we're seeing a deeper correction. Normally, oftentimes they call it a wave 3 correction or 3-wave correction. One, second wave here, and the third wave might be in progress right now, which could bring us down to this level. We'll see. At least this is why I am currently not adding to my strategic Bitcoin position, which I'm considering holding for a really long time. It's really strategic long term. I'll be waiting patiently for price to potentially come down to this level, and then I'll be all over it. But we're not there yet. We'll see what this week brings. All right. So with this, let's have a quick look of what we found last week. As you know, every week we are creating a watch list with the most interesting setups. So what did we find last week? A quick review. So I'm going to go to our watch list here all the way down. You can see how many sessions we had in the past. Weekly swing trades from January the 17th, 1 week ago. All right, so we had 8 ideas. I'm going to start with the first one here. Probably the highlight, Alamos Gold. Oh boy, beautiful. Textbook zone break retrace setup and follow through. Look at this. We had our zone break here. We initially went up and then the retrace, and with even a gap down to this level, and then prices exploded to the upside. Perfectly worked out. Of course, this coincides with the rising gold prices as well. But yeah, a beautiful zone break retrace setup here in gold. This worked out beautifully. Boston Scientific, also interesting one. I think we're on the right foot here. We came down to our entry area. We overshot a little bit, but remember what we said? And this is exactly this blue line here. If you don't remember, watch the recording from last week, which you can find on our YouTube page. We said, well, I said verbatim that if we have, I'm draw this, move this down a little bit. If we have two levels near to each other, like this one here, the support level at 90, and this support level at 85. Oftentimes, it's the lower one, which is the more significant one. And what happened? We actually came down almost to the cent, to the lower level here, and then we saw the bounce to higher price level. So this works out exactly as predicted. And we said, hey, maybe scale into a position. Yeah, if you had done so, this would be a very nice setup right now, or a very nice position in which you are in right now. So this worked out beautifully as well. All right, moving on. The iShares Italy. Yeah, this one, it's in good shape. It went lower than we thought. So we thought zone break retrace. Yeah, it happened. It, of course, suffered also on Tuesday when the entire market worldwide went down, and now the recovery. And I think here also we are now finally in good shape for higher price levels. Genesis Minerals Limited. Yeah, zone break retrace. Nicely worked out. We made all-time highs on Friday in that symbol. Loaves Corporation, that was our trade of the week in our newsletter. Not much has changed here. So here we are right now at this support level. It's a beautiful stock, a very steady long-term uptrend. I really enjoy it. Yeah, nice uptrend here, very apparel going upwards. Now testing support, and the anticipation here the anticipation is that support will hold, and we'll see higher price levels in the next couple of weeks. So this is still in progress. Nothing has changed here. It's still a very good opportunity to potentially go long. This one didn't work out. The Münchner Rück, not yet at least. Here we thought, okay, actually, hold our horses, because also here we said exactly the same thing. That's why this red line is here. If we have two levels nearby, maybe the second one will be the more important one. So scaling into a position, into a long position, maybe not the worst idea. We are below our support level here, but I still think that this overarching uptrend eventually will continue. Maybe scale into some position here and use this level here, maybe a bit lower as your stop loss. All right. SPS. Wow, that was a great trade. I think this is already concluded. What a bounce setup. This Brazilian stock from Sao Paulo. Beautiful uptrending stock, came down to support, and what a move. This is a textbook bounce setup. And now we're testing resistance. And guess what? Now it's time to book your profits. If you haven't done so, this would be now profit taking time right there. And lastly, we had VST, Vistra Corp. Yeah, didn't really change when we were still at this support level. So here, no harm, no foul. Prices are pretty much unchanged. All right. So with this, let's, of course, have a look at what we can find for the next week. And before we do, I'm going to ask the question, Nicholas, are there any questions right now which are pertinent? Okay.
Hi, Daniel. Okay, so Lenny wants to know, when you look at a candle and say it's high volume, is that from the length of the candle? How do you know it's high volume?
Oh, you would know by adding the volume
And also,
indicator
I mean,
to it.
if you didn't have the volume indicator on at the time that Lenny asked that, the other way we know it's high volume is if there's a liquidity capture. Liquidity captures only happen when volume is roughly 3 times greater than the average.
Yeah, so you can see, you can tell it here by these little shaded boxes, Lanny, or if they happen at resistance, or the ones it's a bit hard to see here. Just, oh, oops, wrong one. This one, or these ones down here, these shaded boxes. These indicate, without having to look at any volume indicator, this candle had abnormally high volume. Yeah.
Thank you. And now Faith wants to know, she has the Acorn Wealth Trading dashboard. Is that the same thing as the trading indicators one? Does she have all the bells and whistles?
Faith, I believe so. If you're on the platinum version, for sure you do. Faith, maybe clarify which subscription you have for Acorn. If it's platinum, then you have definitely all these scans in your platform. If not, if you have the ultimate, then you only have the Acorn indicators and scans, but not our Emirage and Liquidity IQ scans and so forth.
Thank you, Daniel. Okay, and then the rest of these questions so far are symbol related, so we'll wait on that. Arthur, can you talk a little more about liquidity capture event, the code just checking abnormal high volume at a level, or are there more criteria? And what criteria? So Arthur, we do have the boot camp. Dan, does it explicitly explain exactly what a liquidity capture is in the boot camp?
I believe we do in the boot camp. I can't remember what exactly we said about liquidity captures, but in essence, what it does, really the logic is not that complicated. A candle needs to come down with its close price into the proximity of a level. It cannot completely break it. That would disqualify it. So it needs to stay in the proximity. And that candle needs to have abnormally high volume compared to the average volume. And if that's the case, then a liquidity capture event will be flagged.
And Arthur asked, what additional criteria to a liquidity capture is needed for a support and resistance to be created? So Arthur, liquidity captures have nothing to do with the creation of a liquidity level. They kind of do in essence, but basically these levels are pivots that are volume significant. And we have an algorithm, it checks on multiple time frames. Were there repeated or significant high volume tests of a pivot or an important point on the chart? And that's what creates support and resistance. So Faith, please send us an email. I'm going to answer to you at info@tradingindicators.com because you don't get our watch list on the left. Just send us an email and we'll get that figured out for you.
Yeah, perfect. Alrighty, great. Okay, so now let's move on to our next part of this webinar, which is to scan for interesting setups for the week and the weeks ahead. And I tell you already, there will be some interesting ones right now. I run the scan just a couple of hours before when I have my webinar in German, which I always have at 10 a.m. Eastern before. So I did a little bit of a sneak peeking already, but let's do it right now here once again. So what we're going to be doing is we will focus on one setup at a time. Today we're going to focus on two setups indeed, based on what we see. We're going to create a watch list based on that. And then at the end, we're going to go through that watch list to find the most interesting picks. So what are the setups that I personally prefer the most? So first off, we're going to talk about the bullish bounce setup. Now, why bullish? Because stocks and ETFs, and this is basically what we're scanning through here for the most part, they do have an upside bias. In trading, it's always about stacking the odds, putting all your odds into your favor. So if there's a bias to the bullish side, why not focus on the bullish direction? It doesn't mean that bearish trades won't work. Of course they will. But, if you really want to stack your odds, maybe the bullish direction is what you want to focus on. So this is why today we will be focusing on stocks which have been in a long-term bullish trend, because we want to also go long. So the trend is your friend until it bends and ends. But the odds of having a trend continuation are simply greater than the odds of a trend reversal. That's the technical analysis fact. All right. But of course, within trend trading, and we wrote this in our announcements for the webinar, it's all about timing. Yeah. There are really bad moments where you want to get into a long trade, a long trend trade. For example, and of course, hindsight is 2020, but for example, entering up here or entering up here when things are really extended. True trend trading is about finding the best moment, the best timing to enter into your trend trade. And typically, these moments happen when a pullback has occurred. It sounds a bit counterintuitive because prices are actually coming down, but the assumption is this pullback is temporary. It will continue. The upside will continue in the interim. We can find these pullbacks with our trend radar indicator. You can see it down here, which shows these patches of red within an otherwise green area. These are healthy pullbacks, and this is what we'll be waiting for. And ideally, now again, this is about stacking your odds. Ideally, this pullback will coincide also with a technical level. And in our case, or in our scenario number one, this technical level is a key support level. A technical level as identified by our Liquidity IQ indicator. So how can we find these particular stocks? Well, let's go over once again to our dashboard, and we can now set our criteria. So the criteria number one is, if you remember, was we want to be in a long-term uptrend. So this is established by an indicator which we have on the chart. We just enabled right now, which is called MA Rush. So this indicator does the following. Let me just go back a little bit here. There we go. It shows you these, one second, these bullish and bearish labels directly on your price chart. You can see it here and here. This is what MA Rush shows you on the chart. And this particular case, without using magical power, I can tell you that this bearish label here happened. Actually, I can't tell you. 1 second. Happened 675 days ago, because this is being picked up in our scanner right here. So SPY went bullish 675 days ago. What we're going to be doing now is we will be using the filter here for our MA Rush column, which coincides with this indicator. It's the same name. And we'll select bullish as the filter. And once you do, this is done, and you can see this happens in the blink of an eye, of our 5,780 symbols that we're currently scanning through, 3,427, so way more, well, more than the half, I should say, they're currently bullish. And this is confirmation, statistical evidence that the stock market, which is pretty much 90% of what we have here in terms of symbols, there's a bias in the stock market to the upside. It's very clear. All right, so now we filtered out all our bearish stocks, so we can focus on the bullish ones. But that's not enough. We want to find stocks which are, unless, let me just find a good example here, unlike this stock here, which are currently pulling back. by quite a bit. So Alcoa here, of course, we are bullish here, that's fine, but prices are very extended. Look how far we are away from our averages. Now we put back a little bit, but not enough for our taste. This is not where we want to enter into a trend trade. We want to enter into a trend trade when we actually pull back. All right, so let's do this. I'm going to now go back to our pullback scanner here, which is based on this trend radar indicator, and select level 4 pullback or level 3 pullback. You can see now we're down to only 543 stocks. Of course, only in quotes because it's still too many. Here's some examples. Agilent Technologies, level 4 pullback. Now I can see 1, 2, 3, 4 levels here on trend radar. 1, 2, 3, 4. Pulling back. All right, great. So we now are finding stocks which are bullish and which have a level 3 or level 4 pullback. But there's one more criteria, if you remember. We want this pullback to coincide with a key technical level. Is this the case right now here? No, it's not. In fact, if you look at this stock here, we're right in the middle, in between support and resistance up here. So we are not nowhere near technical level. So how can we find these stocks which are also trading near a support level? Well, for this, we're going to use our Liquidity IQ setup column here and select long bounce. And long bounce means we're bouncing off a level, in this case a support level, to the upside. All right, we're going to select it. And now we're down to only 22 stocks. Perfect. Now let's sort by trend duration to focus on the ones which have the longest duration. And here we go. Perfect. All right. So the first stock is something that I actually don't know at all. It's Maruti Suzuki India Limited. Let's check it out. Kind of a strange stock. Let's have a look. I'm probably going to skip that one just because it's so unknown to me. But nonetheless, you see the pattern here. Long-term uptrend. We made all-time highs and now the pullback to a key support level and a level 4 pullback as per our trend radar indicator. I mean, that's an interesting one. I'm almost tempted to look into that. So let me just go back a little bit further. The only thing I don't like too much about this is what I see right here. Do you see this one here? Let me hide MA Rush for a second. This gap here, it really stands out to me. If you train your eyes to look for gaps, these gaps, they tend to get filled over time. We saw it here. Similar scenario here. Up gap, these are bearish patterns. Yeah, and then this gap was filled shortly afterwards. These gap fills, sometimes they can take a long time to happen. And if, we're thinking long term, maybe this bearish move down here is potentially an attempt to fill this gap down here, and then prices would come down all the way to this level. So for two reasons, because first of all, I don't really know this stock, and secondly, there's this gap here. I'm going to skip this one from our watch list, even though it's candidate number 1. Moving on, number 2, the Hartford Insurance Group. Yes, a good old friend of ours. We've looked at the symbol many, many times, and we can see here, for example, that yes, this is much better. Yeah, nice long-term uptrend, a pullback down to the support level. And what else do we see here? Look at this last candle, a liquidity capture event. And this is going to be our first candidate for a potential move upwards. The only thing, if I had to criticize something, in fact, and certainly something to be pointed out, is we do have this resistance level not far away. So this is only a couple of points away, which could drive prices further down. So that's going to be a consideration later on. But for now, we're going to add the stock to our watch list. So let me go back here. Oops. I want to create this new watch list. There we go. Create. And I will call it Weekly Swing Trades column 2026, January the 24th. All right. Create it. And I'm going to add the Hartford group to it, to our last watch list. And what I will also do is I will now go ahead and share this watch list with you with this little button here, which is for administrators only. And I will unshare the watch list from December 13th because we're only sharing the last 5 watch lists because we don't want to clutter your space. All right, done. Okay, so that was the Hartford group. But what's next? All right, Lowe's Corporation. I still like it a lot. I would have loved to see that bounce happen earlier. So you can see long bounce 5. That means that it's been 5 trading days since we are in this long bounce situation here, I still like it a lot for a long trade. I'm gonna add this one as well to our list once again, as we had last time. Done. Third one. Oh, Aubrey, you might be happy now. I'm not sure if you're still long JP Morgan. It just got back on our radar here. A stock which we had many times in our list already for a trade. I think the last one was back here in November, where prices were at 286. It's much higher now. Before this, it was in September. You can see JP Morgan is a good old friend of ours. Now it finally pulled back once again. Let's open up the chart. The Cadillac, I would say, of all US banks, they went down a little bit. Somebody told me this morning it's because of a potential lawsuit of President Trump against JP Morgan in Florida for $5 billion. Maybe this is what has shaken this market down. Not sure. Nonetheless, I believe many banking stocks are a little bit under pressure right now. This is a clean technical setup, long-term uptrend down to support. I like JP Morgan for a long. So I'm going to add this one to our list. All right. All right. By the way, guys, I think it's time now to give you guys a little preview. It is something we've been working on. It's not ready for prime time yet. I think maybe for the lunch on Tuesday, maybe the week after, we're still putting the final testing on it. We will be adding something, at least to me, exciting to the dashboard. So let me just back up a little bit to explain this. So let's say we do have an interesting technical setup, just like this one here. That's a nice bullish setup. But having this setup is one thing. Executing on the setup is a completely different story, and there are many options, some better than others. So let me give you some ideas to what you could do. Well, you could buy the stock outright. That's probably the most straightforward way to do it. You could buy JP Morgan shares with this setup. Perfect. You have know exactly how much you invest. Your risk, of course, is your investment. Even if you set your stops, there's some risk of your overall investment there. That's one way to do it. You can go outright into the stock. Option number two, you could buy some call options. Call options are also an interesting vehicle to bet on the bullish continuation of the stock, and you are risk limited. Of course, you have to pay for these options, but if option pricing is affordable, they're currently low, this could be an interesting idea. You can go long options, go buy call options. You buy an options contract, a call options contract. Option number three, then, well, I don't want to use the word option too many, but the third way to play this bullish setup here is to sell puts. You say, selling puts, what's that? Well, you short sell puts. These are called cash secured puts, where you would collect the premium of that options contract. And if prices continue to the upside, you simply collect the premium. You can potentially do it again. You've got some cash in your account. If prices go down and you get assigned, which is possible, maybe the price is going to go down here if you sell your pot at the strike price here at 292. Prices go further down to 280. You get assigned at expiration or even before. Then you're forced to buy this JP Morgan stock at your strike price at 292. To me, potentially, this can also be an interesting idea because if option premiums are high, you collect a nice premium, and oftentimes you will not get assigned if this works out. And even if you get assigned, especially for stocks which are quality stocks like JP Morgan, which you potentially don't mind to have in your portfolio in the first place, this can be an interesting play. But of course, it all depends how expensive or how cheap options are right now. And this long explanation just to explain to you the new feature, which we will be rolling out soon to our dashboard, is a way to see directly in your dashboard. I'm going here to our developer version, the different URL. You won't have access to it. A way to see how expensive are options right now by means of this column here. It's a working title. It's called ATM percent, at the money percent. Basically telling you how expensive is our call option contracts right now with a 30 days expiration at the money compared to the stock price or relative to the stock price. You get this percent value. here. So if an option contract is cheap, you oftentimes get like prices, below 2%, like 1.65 or 1.77 or even less, 0.81. Very cheap options contract, which lend themselves to scenarios where you want to buy options because they're very cheap to have. But you can also have the case where option contracts are actually expensive. Oops, more than more than 5% or even higher. Oops, 1 second. There we go. Yeah. So then 17%, 18%, 16%, even 10%. These are scenarios where you potentially want to sell options because you collect a lot of premium. And if you can combine this thing with a tactical setup, yeah, then you can really find interesting option trading ideas. So let's check out what JP Morgan gives us. I'm going to go to JP Morgan. There we go. And we can see here, okay, JP Morgan right now, if you're thinking about buying calls, I think it would be a bit too expensive for my taste at 4.48. Maybe in this case, selling puts, cash secure puts is not the worst idea. If you have the capital to buy 100 shares of JP Morgan and you are willing, if you get assigned, to hold it in your portfolio until prices recover. Now, it's not ideal. Ideally, I would see something like above 7%, but nonetheless, it's not cheap what you will get for the options. So selling options, maybe not the worst idea. All right, I hope I didn't confuse everyone with this, but I thought I'd give you a bit of a preview. Which brings us to our next stock here in our list, AppLovin Corporation. All right, long-term bullish, a level 4 pullback, and also here, right now, at a key support level. And once again, this could be an interesting long opportunity to potentially look for bullish plays here when the market opens. And just to contrast this, let's do it one more time. I'm going to go over one more time to our developer version here. If I put in the same stock here, this one here, oops, AppLovin, 1 second, cancel. There we go. You see 15.88%. So, this particular case, potentially selling puts could be not the worst idea. Of course, there are many other considerations, but at least it gives you an idea of how cheap or expensive options are right now for this particular stock. So this is something we'll be rolling out to accommodate option trading even further. And we already have this column here called optionable. This is something in addition to it. And we're also going to be rolling out which options are actually available for this particular stocks. In this case, weekly options are available. Sometimes it's only monthly options. Sometimes it will be even daily options. You know that the SPY, the QQQ, silver, gold, all these ones have daily options, daily expirations available. Alrighty, so now let's talk about I like AppLovin. I'm going to add this also to our list. All right, perfect. Okay. Now, sometimes we're still the same setup. It is a bit too stringent to only focus on stocks which have level 3 or level 4 pullbacks. What I'd like to do next is I like to take away this filter to see what other bounce setups we get. So I'm going to take this away and look at the list here. And the one thing I also like here is this one down here. So you can go through this list yourself. These are some foreign stocks here, like the Performance Food Group. This one, this is not foreign, but this one I don't like because we came from below to that level. So I'm going to rule this one out. The Barrett Business Services, I believe it's the same thing. We're coming from below to a level, not my ideal case. But this one here, Aflac Incorporated, that's an interesting one. We had this multiple times. Yeah, a stock which is in a long-term uptrend. You can see it here. Yeah, currently in a sideways consolidation. We're somewhat in the middle of these bigger sideways ranges, but nonetheless, I think at this price level here, this could be potentially also a long opportunity to bet on the fact, okay, we're going to be bouncing off this level towards higher price levels, towards this resistance level here. So I'm going to add Aflac as well to our list. All right, perfect. Now, this was one setup, our bullish bounce setup, but as you know, we also have other setups. So what happens if a zone is actually broken? So this will happen in trading. Zones will not last forever, like nothing in life, Eventually, zones will be broken. And this can happen to the downside, you can see it here, but also to the upside. So in this particular case, for example, resistance is broken to the upside. We came up here. And one play you can do when this happens here is you can anticipate, okay, after this break, price will continue in the breakout direction for quite some time afterwards. That's completely legit. But what I like to do is I like to put one more nuance to it. I wait patiently. I'm sitting on my hands until prices initially go up, but then retrace back to the broken level. So this is a setup we trade all the time. We call it the zone break retrace setup, because oftentimes this initial retracement back to the broken level is a launch pad for an even more aggressive move to the upside. So how can we scan for these setups? So back to the dashboard. I'm going to clear out all our filters. And now I'm going to enter only one criteria into our dashboard, into our scanner, which is called the bullish long break retrace. This one here. I click on it. And you can see of our 5,780 symbols that we're currently tracking, only 22 of those are currently in this setup. So it's extremely selective. Then I like to filter by or sort by trend duration from highest to lowest. And the first stock that comes in here is Howmet Aerospace, HWM. Let's check it out. All right, there we go. Howmet Aerospace. We can see here prices came. It's a beautiful setup. Long-term uptrend. Howmet Aerospace, we made all-time highs earlier this week, but then the retracement down to this broken level, and I think this can be an interesting long opportunity coming close to our averages here too. We have a level 3 pullback and trend radar. I like this setup for a potential long. So I'm going to add this one to our watch list. Perfect. And perhaps one more. What's the next one here? I think I'm going to skip these foreign stocks here, but let's have a quick look. Yeah, this is that's some data glitch. We're going to skip this one. PIA.AX, an Australian stock, low liquidity. Not my cup of tea, also very low priced. But this one down here, Wells Fargo and Charles Schwab Corporation. And this is the reason why I saw this before, why I think banking stocks in general are a bit under pressure now. They all are showing some retracement from very high prices. So Wells Fargo is one example here. Also an interesting one, even with a gap here. Yeah, a down gap, which is a bullish setup here. Potential candidate also here for a long trade. I'm going to add Wells Fargo as well to my portfolio. On Monday, just be careful when the market opens not to overexpose yourself to risk, not to double down. So these are all banking stocks in the finance sector. Maybe pick one of them. I probably will go with JP Morgan, which is probably the most stable US bank. But even these ones are interesting candidates as well. Charles Schwab. There's one more example again. You would only take one of those. Now here I don't like the setup. It's too wavy or too zigzag above. Nonetheless, I believe these are some interesting setups for the next week and weeks. And now, before we get to your questions, let's have a quick look at those and see which ones we like the best. I'm going to go back to our watch list. All right. And we can see we have 7 stocks right now, which is a good number. And let's see which ones are my favorite ones. So all right, so I'm going to sort by setup here, and we're going to get Lowe's Corporation. I like Lowe's. I liked it last week. I still like it. I'm going to definitely stick with Lowe's here. If you're not long yet, this could be a potential long entry. So I'm going to add one more time Lowe's here to our trade notes. All right. App 11 Corporation. Okay. In fact, let me just enable this indicator here. App 11 Corporation. Bullish for 603 trading days. Very high options premiums. We're going to discuss this case potentially in our lunch and learn one more time how you could play this one with options, with some option selling strategies, maybe credit spreads or maybe cash secure puts. I like it for long as well. The earnings coming out on February 11th, but yeah, I still think there might be a bounce in the happening. So I'm going to add this one to our list as well. All right, let's go. Come on, come on. All right. The Hartford Insurance Group. Oh, okay. Let's take a closer look at this one. It was one of my first picks today, but come to think of it, I think I'm going to skip it. I like this it's a nice technical setup in a long-term uptrend. No problem with that. The only thing I don't like here is this resistance zone right above. It's just only like 2-3 points away. It's a bit too close for my taste. This trade potentially will have only short lags and may bounce off this level again. For that reason, I'm going to skip this one for today. Affleck. It's an interesting one. Um, let's have a look. We came down here. Ah, the only thing also with this one here, I mean, if you really want to be conservative, you probably want to wait until prices come down potentially to this lower end of the sideways channel and then look for longs, which are probably if you want to be very patient. We may never get here, but right now just be aware that we are right in the middle of this broader channel. So it's not the extremes at which we normally like to trade, because these extremes is really where the money is. So actually for this reason, I will also not put this on my hot list for tomorrow. It's an interesting idea, but it's unfortunately prices are not down here. They're only in the middle at this intermediate support level. JP Morgan. Oh yeah. I like it. Even from a longer term point of view, maybe Aubrey, if you can comment, do you still have a JPM position? Not sure. I think this could be an interesting opportunity here for a long trade. Definitely something for next week. All right. Okay. Safe. And two more. Wells Fargo. I like it too. I would only take one or the other. So either JP Morgan or Wells Fargo. I don't want to over leverage myself. Diversification is key. Here you do have this downside gap, as you can see it here, which is a bullish setup. Down gaps are bullish because gaps often get filled. If this gap were to get filled, prices would need to go up all the way to this price level. So that's a bullish play. Uh, I like it. So also JP Morgan will be on our list, but just make sure you don't over leverage yourself with, or Wells Fargo will be on my list. Just don't over leverage yourself with JP Morgan as well. And finally, Harman Aerospace. Yes, interesting one. Level 3 pullback. I like it. It's a great long-term uptrend in this stock. And I think this one there's more to come for the upside direction. So let's add this one as well. We had Howard Aerospace a few times already on our list. Last time at 123. When was that? Back in October. 123. Is that possible? Was some kind of stock split coming up here? Yeah, I think so. Well, nonetheless, this stock has been on our radar a few times prior to this.
I have a nice
All right.
feature idea here, Daniel. I'm writing this one down from David.
Yeah.
This is for liquidity IQ. Could a potential enhancement be a strength factor of a support or resistance zone based on past behavior when price gets close to it? Like, does it break or hold?
Mm-hmm.
That would be
Yeah. How
cool.
much?
Perhaps like affecting the opacity of it.
Yeah, that's a good idea. Okay. Thanks, David. Alrighty. Okay, guys, I think that's a pretty good rundown of our trade ideas for next week. Now it's time for you guys. Do you have any questions? And before we get to these questions, I'm going to quickly remind everyone, if you are fascinated by our dashboard and don't have access yet, try it out for 1 full week. You won't be charged today, even though you have to put your information in there. You won't be charged today, I promise you. You can cancel at any time. Simply go to tradingindicators.com/view. And of course, next week we're going to be rolling out most likely our new options pricing feature, which I'm very excited about. All right. So now it's time for our questions.
Okay. So, yeah,
Have some
Aubrey says
coffee.
he added to his JPM position
Mm,
on Friday. And now we have similar requests. Daniel, could we please
yeah.
start with mhm,
But
SYF? Did we already look at that? It was the trade of the day a few weeks ago.
yeah,
Do you think there's a
yeah,
level 4
it's
pullback or a bear flag?
that's a good question. It looks a bit bear flaggy. Yeah. Uh, I think we're still okay so far. It's a level 4 pullback. It looks a bit bear flaggy here, which would bring it down to this level most likely. Uh, I'm still bullish this level. I just have to potentially hold on to it a bit longer. I think also this one suffered a little bit from all the financial stocks being under pressure last week. So I'm still optimistic for this one, especially if the gap to be filled here.
The Bitcoin move you were talking about, is that what you're predicting for gold and silver as well?
Oh, Nicholas, you cut.
The Bitcoin move you were talking about, is that what you're predicting for silver and gold as well?
No, I mean, ah, silver and gold are clearly an absolutely strong uptrend. There's no question about it. I just don't want to be caught in level a deeper pullback, which brings me down from here to maybe there. Especially if you're getting into this one leveraged, this might be something which would be especially very expensive. That's why I'm a bit hesitant I'm waiting for a pullback and then I would look into longs. So no, I think Bitcoin is in a completely different technical setup. If you look at Bitcoin here, so what I see in Bitcoin, let me just zoom out a little bit, is we have had a really good run in Bitcoin, no question about it. And what we're seeing right now is a correction of this big run. And typically, after a big move up, a big bullish move up, the corrections happen. This is what Elliott wave theory tells you. These corrections happen in three waves. One, two. And if this were to be right, then wave three would bring us below the low point of wave one. That's what needs to happen for this, if that assumption is right. And I think this one would bring us to this level here. This is why I'm waiting, but we don't see any of this in gold or silver because there we're still in this upwards move, and God knows how long this could continue. So here we are actually already in the correction phase in Bitcoin. So it's a different, we're in a different phase right now in both stocks.
Thank you. Can you please look at UNG?
Yeah, natural gas. Alrighty. Okay, where do we have it? Yeah, bullish for 762 trading days. Jumped up a little bit. Bearish for a long time. Yeah, I don't know. I mean, I don't want to. These are resources, of course, and commodities. I'm still bearish though. I think if you're coming up to this level here, maybe do something with puts, potentially betting on the fact that this bearish downtrend will continue. So yeah, definitely more on the bearish side.
Thank you. Okay. And the next thing will be HWM.
H
A long break
W.
retrace setup. We see
Oh yeah,
relatively
you
high
just said it.
volume. Do you see
Yeah.
this as a warning sign that there's two high volume red retrace candles?
No, I mean I really like this setup. It's if you were to criticize it, is that typically when we see zone break retraces, they go up a little bit further and then come down. So if you want to see a picture perfect example of this, it's this. So we go up a little bit more and then we come down, like very symmetrical, up a bit further and then down. This is not what we have right now in Hamid. It's a bit shallow. So this is not 100% textbook. Nonetheless, I do think it's a nice bullish play. And I'm not
Michael
worried
wants to
about
know,
the.
how do you know such a zone break retrace won't continue to the downside to fill the initial gap?
I don't see a gap here actually.
This definitely isn't specific to this chart. I think it might have been something else, but it's also just a question. How do you know that
Yeah.
a retrace will not continue to the downside?
Yeah, you don't know. It's there are no guarantees in trading. It's just something that I mean we see it over and over again. But of course, there are also many examples where it doesn't hold up. But again, trading is about putting the odds in your favor. So what do I see here for this particular stock? I see a really stable long trend. It's a long uptrend. And so the trend is your friend. We are trading with the trend. That's one thing we put in our favor. We do see a pullback. So level 3 pullback on trend radar. Prices have begun cheaper. We're having less risk on the table. We're getting in cheap, and it coincides with a technical level. This former resistance level now acting as support, which hopefully will prevent price from bouncing upward. So I'm just playing the odds here, but of course there are no guarantees. Um, but it's a setup that we see a lot. I think STLD a couple of weeks ago. I'm not sure where it is right now. STLD, STLD, Steel. Yeah, this one is Steel Dynamics. Let's see where we are right now. Yeah, picture perfect. This is what I'm envisioning for Hornet too. Look at this. We called this one out in our session. Zone break. We came up a bit further. So this is a bit more textbook, and then down to the level, and then it takes off. That was this level here when we called it out. So that's the idea. Okay.
Okay, and then Aubrey says on app 11, be aware it's the target of some short activist attacks. Can you please look at CTAS? Arthur
CTAS.
wants to know
Oh, Cintas. Yeah.
the
Yeah.
lower MA rush line, a good stop or profit taking time at actual price?
Ah, lower MA rush line. So this one here.
Oh yeah, okay. If you went short on the bounce, would that be a good prop? If I was short there, I would not take my profits at that line. That's way too soon, I would feel. Like the setup hasn't even carried out. Um, you
I
know?
do hope it's going to be the end of it because I'm having a long position at CETAS.
Oh,
But I mean, I like the fact that we called it out here for a bounce from support. We came up to resistance now. Of course,
oh, MA Rush is bullish. Sorry to interrupt you.
yeah, I mean, it's a long-term bullish stock. So I would not go short to begin with,
Yeah.
even off this level. Too risky for me. And I'm personally think that, we are consolidating sideways here. We're gonna eventually get above this level back to the upper end of it. Um, at least that would make me happy. So no, I would not book profits here. If I were short, I think I would probably go to this level here at
I
184 or
think
maybe
they
down
were
here.
long, and
189.
I misunderstood things. So they must be long from the bounce. So that's
Oh
why.
yeah.
Okay, what was it? A
Oh yeah.
trailing
As a
stop
s-
or profit
as a
taking?
swing trader, yeah, I mean, you would probably want to go out when it came up to this level. That would be ideal. But if you're still in, yeah, potentially book your profits now, or maybe hold until this level is hit in case it just bounces up higher. Mhm.
Definitely. And Arthur wants to know, Daniel, when you come into Northern Germany
When? I don't know. I come maybe 3 or 4 times a year.
to meet the big community there, Arthur says.
Yeah, actually, I've been invited to. First of all, yes, it's very nice to have 4 people from Hamburg here, which is typically the airport I fly to, then take the train from there. But yeah, I definitely will be coming to the Invest conference in Stuttgart, which is in April, I believe, and I might combine this with a trip to Hamburg as well, to where I live. Otherwise, I don't know, maybe in May or June. I'll let you guys know. It would be nice to meet up, go for a nice currywurst.
Where are you going in April, Daniel? And the next symbol is going to be Netflix. But while you're going there, aren't you going to a conference in April to Germany?
That's why I said in Stuttgart,
Oh,
the
sorry.
Invest conference. Yeah, that's right. Yeah. Okay,
Okay.
let's move. Okay.
Netflix, do you expect support to hold here?
Yeah, I'm a bit skeptical. I looked at Netflix earlier today in my previous webinar. It looks to me a little bit like a falling knife, um, coming down a lot. I mean, we did see some initial bounces, which is good. It's a really deep pullback. You can see in trend radar here, it's all red. Um, yeah, yeah. If you want to take a shot at Netflix, but all the streaming providers are under the water a little bit in last recent history, then now could be a good level. Let me see what the option prices are for Netflix. Just have a quick look here at because if anything, I think I would do something with options. So Netflix, have a look. Yeah, 2.9, that's relatively cheap. Maybe you think about call options or some buying option strategy, betting on the fact that, hey, that was the end of it. We'll see a nice bounce. Yep.
Okay, the next one's going to be LRCX. I looked at this chart. It's actually kind of cool.
LRCX,
Lamb
Lamb
Research.
Research. Okay. Breakout here. Okay, we're trading above resistance. A slight pullback here. Options are expensive. Yeah. I wonder what they do. What is Lam Research doing? Oh, semiconductors. Okay. Yeah. Interesting. They have earnings coming up. When on the 28th next week. Yeah. I mean, with earnings up, be careful. This is also probably why the options price are very high, 9.46% for such a bullish stock. That's really high. I mean, if you want to gamble, yeah, maybe get into it. Hopefully, you get a good jump to the upside, but of course, only with a lot of risk capital. Buying options right now, I think it's expensive calls or even strangled. This is why when you want to get your strangle placed. So that's what the option professor does, way ahead of earnings when they're not so expensive. So now, if you buy a call and a put at these high prices, even if it's out of the money a little bit, then chances are you will not get any professional you won't make any profits because you need a huge move in stock price after earnings come out. Anyways, that's something for a different topic. But yeah, I like it. I just think it's overextended earnings are coming out. So maybe wait until earnings are done and then potentially think about a position. Maybe you get a gap down of earnings, then do something with options afterwards when options are much cheaper. Yeah.
Thank you. Okay, and now on CCJ, if you're
Yeah.
long, would you hold or sell? Derek is long.
Comic. Yeah, CCG I think is a great stock to have. We called it out, by the way. A couple of times in this webinar. Actually, let me go back to my not the developer version here in CCJ. Let's look at the yeah, that was one of our nicest trades probably in the last couple of weeks. We called it out here and here. And both times they're huge moves. I can see them here in our trade notes. On November 15, and prices were down at 80-ish. Now they're 124. Jesus. I mean, Derek, it's extended. A retrace to this broken resistance level is not unlikely. So maybe think about booking some profits at least. Nothing wrong with ringing the register. And if prices come down once again to this level, maybe reload the gun. That's what I would do. But again, we're talking about trading here. So if you believe in something as a long-term investment, you have this long-term macro outlook, you would not, buy and sell so often. But today it's about swing trading where you want to take frequent action.
Thank you. Okay. Do you ever consider using RSI in your trading?
Yeah, sometimes to see if things are overbought or oversold, as you said. But what we like to do is to focus mainly on our technical levels and volume with volume IQ on trading, for example. But we do have some plans or had some plans to release uh, a more sophisticated RSI indicator. We call it RSI Fusion. It's in our drawing board right now. It's we did some testing on it. It looks pretty cool. So the short answer is no. Right now, we don't consider it, but we might be adding this to our repertoire in the future.
Thank you, Daniel.
All right, and I have one more thing, and I left this open here from Aubrey. He sent us an email. Aubrey, if you're still there, let me just quickly see where was that? LAR. He was wondering about what about this stock. So LAR, I don't think, do we have it in our list here? Let me just quickly see. Maybe not. No. Okay, so I'm going to go to trading view and let's have a look at LAR. He was asking to review this particular setup. It's an Argentinian stock in lithium. Okay. And they actually just re-domiciled to Switzerland. That's why it says AG at the end here for tax reasons. And Aubrey was thinking about this one. And I believe, Aubrey, you stumbled over the stock with our gap IQ indicator. And maybe run some gap scans. What we saw here is that we did have this really big down gap here. That's from back in 2023. So huge down gap. It's a massive gap. And this gap might get tested over time. At least that's Aubrey's hope. And he's asking, Daniel, what do you see from a technical point of view for this particular stock? So let's try to analyze. Is it likely that this gap fill will happen? In other words, we can look here at our history box. These down gaps, so far all the big down gaps have been filled. Of course, there were only 3 so far, so the sample set is not very high. But what are the odds of this getting filled? So let's look at this stock with our indicators. Okay, so what do we have here? I'm going to make this a bit bigger. Let's just look at the interim here. Where are we? Right now, we are, Jesus, this is a nice big move. We are trading above this resistance level. So we did have the breakout here. This was resistance before. Also, it was reinforced by this high volume node of volume IQ. So that was a really nice breakout move. The question is, will this move continue further up? So I'm going to zoom out even further. I'm going to go to the weekly time frame here just to see where we are in perspective. Okay, what do we see here? I mean, we are clearly bearish, Aubrey. That's something that would go against your hypothesis that this gap will be filled anytime soon. And of course, on weekly charts, you don't see gaps. That's just to be clear about this, because every week, basically, there will be trading of some sort. This gap only exists on the daily chart. Yeah, I mean, it looks a bit like we bottomed out. This might be another leg up here, but from a technical point of view, I don't see much. I see the support level down here at $1.91. It's probably not something you want prices to come down to, or it's too far away for a stop loss. And up here, I mean, the really next level of support and resistance would be either here, this former support level now acting as resistance, or perhaps this high volume node. There's also a high volume node here, which might get some trouble. But right now, just from a volume profile point of view, we do have a low volume area here. You can see it here. Oftentimes price accelerates to this level. So, I mean, it's a judgment call, Aubrey. I don't know what the likelihood is of this getting filled. I like the fact that we have some bullish bias here. Actually, no, it's neutral territory, so this is gray, but it's low volume, so prices may accelerate through it and then perhaps slow down a little bit at this higher volume node. If you can get through this one, the next step I think would be somewhere around here, which would be our gap fill. That's yeah, my 2 cents there. Nicholas, do you see anything else in that stock? It's a bit hard to
No,
interpret, I
not
guess.
really.
Huh?
I kind of
Yeah,
entirely agree.
yeah. Okay, alrighty. That's it, I think. Yeah, do we have any other questions? I don't see any when I look over here.
Nope.
So that's great. So let me go back one more time to my slides here. And one last reminder. So if you want to give this dashboard a try, tradingindicators.com/view is your chance to try it out for 1 week for free. No payment will be charged. All right. But this leaves me with wishing you all a great weekend. Take some rest, recharge your batteries, and hopefully we will see you all next week. So next week we do have our lunch and learn session on Tuesday, and we have our live trading workshop on Wednesday morning. An announcement will be sent out for this very shortly. And of course, if there were some questions which were left out, please put them send them to us via our homepage, tradingindicators.com. Click on support, then contact, and put your question there, and it will go straight to your inbox. With this, guys, have a great weekend and talk to you soon. Bye bye.